Welcome to Bunnex Investment Group. In this video, we are going to talk of a pattern or a setup that will actually help you double your account. It might be $100, $250, or $1,000. This will help you to double your account. Sit back, relax, and have somewhere to write and take some notes. All right, before we talk about anything else, we need to highlight these important principles. Right? First, we need to highlight the parameters that should be in place for this strategy to work. You should have at least $100 in your account. Anything below 100 will be difficult in terms of calculating your lot size. You must be willing to take 50 entries of the same setup that we will discuss about in this video. Although the backtesting of this pattern shows an accuracy of 75%, we will hack our mind and go with an expectancy of 50% win rate. So basically, for the trades that we want to take, which is 50, this means we are assuming to win 50 and win 25 and lose 25 as well. Then the last important principle is we do not know how the losing trades are going to come. Make sure you write down these principles. So by not knowing how the losing traders are going to come, let's hack our mind that the first 3 entries that we will take with this particular strategy are going to be losers. And that is going to add up to 25 with the other losses being unknowingly distributed within the system. So we are going to require 3 indicators. And this is to remove subjectivity within our system. They are going to be 5, 13, and 50 EMA, right? Still on that, how are we going to double our account? With this pattern that is in subject, we are going to take 50 trades of that particular pattern, and we are going to risk 4% of our account. Meaning if you are going to have $100, that's going to be $4, right, per trade. If a trade goes against you, it should subtract $4 from your account. If you are going to win, we are going to win twice what we have risked. So per trade that is won, we are going to win $8. If it's 1,000, this is going to be multiplied by 10 so that you can see the exact money that you are going to lose or win when it comes out. So basically we are saying by 25 trades that are going to be losers, we are going to lose how many? We are going to lose $100 in this particular case. And by 25 on the winner's side, we are going to win $200. It means your account has been doubled as $100. So basically, this is where we are coming from by saying it will double your account. You need to be consistent in terms of the lot sizes that you are going to use. I recommend my Forex calculator, which is found on Google Play, and you can have it in your phone. It will help you to calculate the lot sizes so that whenever you lose, you are only going to lose the $4 and the $8 on a 4% risk exposure. So here's the definition of the trading pattern that we have in subject. Call it the high accurate H1M pattern. On this particular pattern, we need to see a 513 EMA cross when we are creating the first leg. 5 in different color, in my case it's yellow, 13 in red, and then we need to see its neckline occurring at the 50 EMA, and after that we need to see another 513 creating the second leg. At this first leg level, or below, just below or just above, we need to see a candlestick reversal pattern, preferably on the M15 time frame. And then after that, we make our entry. So here are the steps to catch the pattern. Step 1, count 3 days of net rise or net drop. We are saying from a particular point, probably from a point of cycle restart, which we call reset, or from a 0 point, we need to see 3 days of rise, of net rise, not 3 days, just 3 days, but 3 days of net rise or net drop, right? Like that. See a reversal with a 513 EMA cross on the H1 time frame. This is basically creation of the first leg of the pattern. Price must touch the 50 EMA on step 3. Then on step 4, the second leg forms, we need as the second leg forms, we need to see another 513 EMA cross to the upside, right? Then entry must be made at candlestick reversal pattern at first leg level as shown below, right? So we now go to the charts to see the exact pattern, but before we see examples, please note that we have a free Telegram channel where we share free signals, free setups, and trading tips. Be sure to be part of our community using the link that I've left in the description box below. All right, so this is the pattern that we are talking about. Let me zoom in. In this case, we can see that the market came to from this particular side, and whilst it was coming from that particular side, we can see there was a 513 cross to the downside, and there was a retest of the 50 in blue, and then another 513 cross to the upside. We've said at this particular point, this is where we need to see a candlestick reversal pattern, preferably on the M15 time frame, right? At this particular phase, this is where we wanted a candlestick reversal pattern. So going forth, let's now stop and see how it was issued. We can see that in this particular case, we had day 1, right? Day 1, day 2, then day 3. At day 3, we expected to see a reversal pattern where we will see a 513 retest of 50. Unfortunately, that was not issued. But at this particular phase, we can see that on this leg, it was issued again, another 513, and this one actually retested the 50, and then they came back to the first leg level, which is this one. At the first leg level, that is where we will look to make an entry after a proper candlestick reversal pattern on the M15 time frame, and then the market went our way. This was enough to satisfy a 2:1 reward to risk ratio, right? On this particular case, we can as well start to see what happened. We had first level, second level, or second day of drop, third day of drop. First leg was issued. Where were we going to make an entry? Unfortunately, we retested the 50 and the 513 crossed, but they failed to come back to retest this particular point. So that was a skip. So basically, we are saying there is, let me mark the days of drop so that they will be easy to see. We have a day of drop, right? Another day of drop. And then the last day of drop. We can see the last day of drop being this one. And after 3 days of drop, we can see the first leg, 513 EMA cross. Let me zoom in. First leg, where we had the 513 EMA cross, retest of the 50, and then pull back to the first leg level, look for candlestick reversal pattern, and after that, we need to enter with a 2:1 reward to risk ratio. Whatever you risk below is what you actually double on the side of the take profit. Then from there, we had another one, 1, 2, 3. After 3 days of drop, we had first leg, right? Retest of the 50. And then the second leg was issued to reach the first leg level like that. Whatever we risk is what we actually, at this particular point, this is where we were going to make an entry, and a 2:1 was definitely going to be satisfied because our stop loss should be below structure, which is right below structure like this, and our take profit must be double what we are risking. So basically, this particular entry, if you take it 50 times, I actually assure you, you will double your account. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.